look at how this is going to translate over to our market today. We are joined by Stan Chamu from IG in Melbourne. Stan, thanks for your time today. Momentous day on US markets, the Dow pushing to an all-time high. What's that going to mean for Australian stocks come 10 a.m?
Yeah, well, we're actually looking at a gain of about 0.4% to around 5092 at the open. So it's still not quite as strong as what we're seeing in the US. Of course, this is just within striking distance of that recent high of about 5113. So that will be the level to look out for today. We're still, I think, around 34% from our all-time high. So that's quite a big difference to the US, which seems to have responded quite well to the stimulus efforts by the Fed and obviously reinforcing that QE expectation for a lot of investors out there. This has really just given them sort of renewed vigor of buying into equities and just keeping on driving this market higher. And of course, locally, it's a bit of a different market. Of course, we've got other investment vehicles to go through, which tend to be quite reliable. And of course, we've got a pretty big property market, which a lot of investors tend to get involved in, as opposed to just solely basing their wealth on the equity market. So it's a bit different from the US, which is probably why we're still much further from our all-time high. But of course, today we expect a fairly good start. We do expect to see the resources recover quite significantly, of course, following China's renewed pledge to growth. And of course, with China having been the source of volatility and weakness over the sort of into the end of last week, I think evidence that they are still committed to an expansion or an easy policy in China, with that 7.5% growth target being sort of reinforced, and of course with them wanting to spend an extra 10% on the fiscal side this year. It certainly seems like the resources will be in for a good day. We're looking at a 2.4% gain for BHP to around 36.26 from its ADRs. Of course, we did see iron ore dip, but this is unlikely to have too much of an effect when people are so focused on what's happening in China. So we'll probably see the resources and the rest of the risk space lead the gains early today, and then potentially we'll see a bit of stabilization later in the session as investors look out for that recent high for around 5113 and see how we'll respond as soon as we test that level. We've also got NAB coming out with reports that it might be looking at 900 million worth of cost cuts over the next 5 years. So that might support their stock. We know the market loves to hear about cost cuts and restructures and whatnot. So that might be another stock to keep an eye on today. But I think it will be all about the resources and the rest of this risk space today.
Okay, so the level you're looking at, though, 5,113, is that right?
Yes, that's right.
Okay, wonderful. Let's talk about the Australian dollar. It's been an outperformer over the past 24 hours or so, mostly after that decision from the Reserve Bank. Well, I shouldn't say the decision, because that was pretty much expected. It was the statement that came with it. Looked pretty much the same as last time to me, Stan. So why did we see a pickup for the Aussie?
Yeah, there were a few factors giving the Aussie dollar a kicker yesterday. Of course, we kicked off with earlier on when we saw those. I think it was the current account numbers coming out a little bit better than expected. That really did feed through with the retail sales as well coming in better than expected, and it fed through to the statement, which sounded fairly neutral. Of course, they did say they're still committed to that easing bias. Should they need to, they can still pull the trigger whenever they need to. But it certainly seems like they're not in a rush at all to cut rates, and I think most analysts were still pricing in maybe 50 to 75 basis points worth of cuts this year. So maybe that's why we have seen the Aussie dollar continue that strength, and as well just that news from China that they're still committed to ensuring that 7.5% growth target, and they will increase their fiscal spending by 10% this year. That really did help bolster markets, particularly with the Shanghai composite bouncing back. Then you can expect commodity currencies like the Aussie dollar to perform well. Now we're currently hanging around that 1024 level. Of course, we still have to get through that resistance within the 1026 to 1028 level. That will be the key level to the key sort of zone to look out for in today's Asian trade. On the economic calendar, we've got the quarterly GDP number expected to show 0.6% growth. And some analysts feel because we had a pretty good current account read yesterday, that might feed through to upside risks to today's GDP reading. So if that happens, then we could well test this resistance zone in the 1026 to 1028 level. And that might be where sellers might kick in. We still think there will be sellers out there feeling like the Aussie dollar is a bit overdone in the short term. And of course, it really does seem like the strength in the rest of the risk space hasn't quite translated to the rest of to the risk currencies. We've got the euro relatively steady, just holding on to that 103 level. That the pound hasn't done much either. So that might be a factor as well, that we've got the central bank decisions from the ECB and the BOE tomorrow. So that might be a source of caution for some investors in the risk space today.
Yeah, definitely. Stan Shamu, thank you very much for your time. Stan joining us from IG in Melbourne there. Well, fourth quarter GDP will hit